Hello and good afternoon, everyone. Welcome to Barchart's latest live stream webinar with Link Data Services. My name is Colleen Sheeren. I'm the head of marketing here at Barchart. I'll be moderating today's session. Also joined here with me is Scott Nelson, commercial director for Link Data Services, as well as Mike Curto, who is a crude oil broker at Link. So yeah, first off, thank you both for being here today.
Thank you, Colleen. Thank you.
Awesome. Yeah, I'm excited to dive in. One of my top objectives within the marketing department at Barchart is to help bring exposure and awareness to our partners. So I'm very excited to be hosting this session and give attendees more insight into Link and the solutions for the global crude industry. So before we get started, Scott and Mike, I'd like to give you both the floor to introduce yourselves and give viewers a closer look into your experience and high level what you do at Link. So Scott, would you like to kick it off?
Sure. Thanks, Colleen. Appreciate you taking some time today with us as well. I'm the commercial director for Link Data Services. I started in the crude industry a little over 10 years ago as a physical crude oil broker, moved on to the derivative sphere. And in 2017, we started Link Data Services. That's been my focus since. There was some legwork in the beginning, but now we've spent the last 2 or 3 years commercially active, and it's been an exciting new role for me.
All right, thanks, Scott. Mike, floor is yours.
Mike Curto, originally from Chicago. I graduated DePaul University in 2006. Started working on the floor at the Chicago Board of Trade shortly thereafter. Moved on to the trading industry for a little bit over 10 years, trading everything from corn to crude oil, and recently joined the Link team back in December of 2020 and was a customer of Link prior to that. So here we are today.
Awesome. Thank you both for those introductions. Next, I'd like to just take a few minutes to talk about Barchart's commodity pricing network. So we launched this back in 2019, and basically since then, we've partnered with numerous providers of commodity pricing and data across various sectors. That includes energy, renewables, agriculture, even food and beverage. So you can see here on the screen the logos of all the firms we currently have partnerships with. We've really grown this network, and I've seen it flourish since we first started this. So we're excited to be partnered with all of these firms, including Link Data Services. So before we dive deeper into the actual data sets that are available through the pricing network, Scott and Mike, it would be great to just hear, kind of high level, an overview of Link Data Services, some background on the company and the services you offer today.
Sure, I'll take that if I may, Colleen. As I mentioned, Link Data Services was started in 2017. We're affiliated with a group of companies, the Link group of companies, if you will. Link Crude Resources is one of the largest physical OTC brokerage desks in our sphere, brokering primarily pipeline delivered crude oil from the Bakken to Cushing, the Midwest, Permian, U.S. Gulf Coast, export barrels onto the water. Link also has a futures brokerage desk, Link Futures. They provide execution and brokerage services across the crude oil derivative sphere. Link Data Services is the exclusive data distributor for those two brokerage desks. So we aggregate the data that's accumulated on those desks as well as in the general crude oil market. We organize that information and then distribute it to any number of user types. We typically provide daily forward curves, market commentary, pricing reports, and then can offer as well custom consulting services and analytics on a one-off basis.
Awesome. Thanks, Scott. Good overview there. Let's talk about our partnership. So Link Data Services joined our commodity pricing network or CPN, we call it for short. That was back in October of last year. You can see here on this slide, we have a dedicated page on our website where you can come to view the data. You can access information on documentation of the data. You could also reach out to us directly on this page on obtaining the data. So some of you may be wondering, like, how can I access this data from Link via Barchart? And there's a few ways. First one being through our commodity trading and analytics software, Commodity View. So users for oil and gas can access Link's pricing data directly in this front end, alongside a substantial amount of other data, including futures pricing, news, fundamental data for energy. It's really a whole encompassing product for users to stay one step ahead of the energy market. And we'll be showing some examples of Link's data within Commodity View later on in this webinar, so stay tuned for that. Another way users can access the data is through Commodity View Excel, which gives users the ability to analyze physical commodity prices as well as global fundamental data alongside numerous other tools within Microsoft Excel. So users can analyze Link's data right in their Excel spreadsheet. Lastly, users can access Link's data through a Barchart API subscription. So for firms who are looking to add this data into their own products or software, our team will work directly with you on a quick and easy integration. So we're really committed to easily providing users access to this data through numerous avenues. So next time you're on our website, come check out this page and you can find out more information.
Excellent.
So Mike and Scott, I think it would be good to now dive into these two data sets here for forwards and spot pricing for crude. So I'll give the floor back to you. Just give viewers some more intel on the data. We could touch on methodology as well as analytics available. So I know there's a few slides here. Just say the word and I'll advance forward.
All right, I'll start if I may. So we assess the physical spot pipeline market each afternoon. What that means, pipeline trade cycle is typically about 30 days in advance. Today, January 27th, we're trading for March delivery barrels. So we'll assess any number of domestically produced pipeline crude, WTI and Midland, for example, light Louisiana sweet on the Gulf Coast. We'll assess Bakken crude oil in a number of locations, both origination in the Bakken. We'll assess it in the Midwest and Patoka. We'll assess Bakken delivered to the Cushing crude oil storage hub. And of course, Bakken delivered to the Gulf Coast. We also have a view into Canadian heavy crude oils delivered into different locations in the United States. We stay primarily focused within the U.S. border. So Western Canadian Select and Cold Lake are some primary Canadian heavy crudes that are delivered south. So we'll assess those each day. At the end of the day, their value as we see them, either executed trades or market information as we know it, both at Cushing, Oklahoma, and the U.S. Gulf Coast. Most of these price assessments are, I would say, not readily available to the general public. It's not necessarily a hugely transparent market. So we're trying to add a little bit of transparency because these physical barrels do inform a lot of macro decisions within the crude oil industry, but also the energy industry as a whole. We also assess each of these grades on a forward basis. We will look at quarters, calendar strips going as far as calendar 2025 for most of these. So it helps folks who are trying to develop a hedging program, trying to develop forward view on any number of equities. The physical crude oil market certainly plays a huge role in that, and we try and provide as much transparency as we can. I think the next slide would go a little bit more detailed into the methodology. Again, we assess a number of different crudes at a variety of locations. Our methodology involves, of course, executed trades. We're involved with all of the major commercial participants on our brokerage desks. So that's producers, transportation companies, trade shops, end users, refiners. So we have a good feel for the supply and demand realities on a daily basis. So we'll have executed trades that we're aware of. We'll have, in the absence of trades, we've got bids and offers that we're aware of at our affiliates. We'll of course see one grade of oil trade relative to another. So as one market moves, it will naturally move another market, even in the absence of trade. So that will certainly inform our price assessments. And then we see pipeline transactions, tariff data, the cost to transport 1 barrel of oil from one location to another will inform the value of the oil at those various locations. And then of course other market related data. There's all sorts of equity information out there that affects the price of oil. So we take all of that into account each day when we're developing our assessments. We provide these spot prices at the end of each trading day. It's typically 5 p.m. Central at the latest. And most pipeline barrels are priced on a differential basis. They trade versus domestic sweet crude oil at Cushing, Oklahoma. So from an analytical standpoint, I'm going to let the expert take over. Mike's been pretty involved in trading crude oil for many years, so he understands, you know, the best way to explain that to our users.
Awesome.
Yeah, I think that's really the value add with linked data is once you dive into the analytics on various different levels. I mean, looking at how the crude oil markets have changed, you know, with the U.S. becoming a net exporter in the past decade or so, you know, looking at mainly light sweet barrels that are heading to Europe and to Asia. We'll have MEH, which is kind of let's say the gold standard assessment, the most liquid MEH and or Midland. MEH is the light sweet barrel, very close to the Gulf Coast. Looking at that versus Brent. Also comparing MEH versus Midland, useful as that's typically representing the cost of moving the barrels from the production center out in the Permian into the Gulf Coast. And then we have various quality spreads and cracking margins represented as well. But in terms of quality spreads, LLS versus Mars, so a sweet barrel versus a slightly more sour barrel, roughly in the same area in the Gulf Coast, and then more of a global spread of LLS versus Dubai, Bakken versus Dubai, with the Dubai crude kind of being the benchmark for Asian crudes. And then of course spreads between Canadian grades, which have quite a bit of diversity in terms of API levels. So a lot of people look at like a Canadian high low tan regrade at both Cushing and the Gulf Coast.
All right, thank you both, Scott and Mike, for those nice overviews. You know, before we dive into some examples and use cases we had in Commodity View, would you guys let's get more insight into, you know, who your user types are. You know, how would you profile a typical individual who would use this data?
I'll take that if I may. You know, on an industrial level, any purchaser or refiner of crude oil, as we always say, every barrel of crude oil ends up in a refinery at some point. There's really not much else to do with it. So if you're refining crude oil, the spot value of any physical crude oil barrel, particularly in your region, but in any region now that the market has gone global, it's important. So an end user, a refiner, would certainly be a user. Trade shops at this point, trading firms that buy crude in one location and sell it anywhere else in the world, are constantly looking at relative values. Transportation companies are constantly trying to refine their costs, and the cost of a barrel is important when they're developing their plans going forward, as well as some trading that they may do. And producers in particular, producers will look at a forward curve as they go and assess their budgets for the forward, you know, the second half of this year, you know, what sort of expenditures they may want to have in 2023. They're going to look at what the current value is for the barrels they're producing. They may take that information and borrow money against future income. So at that point, financial institutions, banks would be interested in this information because they're going to need to understand before they go and loan money to a producer who may want to increase their production. The bank also wants to see what the anticipated value of these barrels are in coming years. So the spot information is extremely important for transportation companies and refineries and their day-to-day operations. The forward information is vital for producers, financial entities, and any long-term speculative trader. It's important for them to have a view into these markets because, again, they do in many cases drive the macro crude industry on a global scale.
Awesome. A lot of different user types there.
Yes.
All right, let's move into commodity view, and let's take a look at some different use cases for the data. We pulled a few worksheets screenshotted here this morning that we'd like to share. So yeah, Mike and Scott, I'll give the floor back to you guys, and we can talk through this dashboard we have here.
Yeah, I think if Scott wants to join on this as well. I think it's obviously unique to every trader in terms of how they want to set up the dashboard, but I felt it was very useful to look at not only our markets directly in terms of a graph or a charting basis, but also on a quote board, and then also as it relates to possibly other listed markets on the exchange. So in this example, I have kind of the basic, the main 4 grades that we're assessing every day. I'd say the most liquid as well: MEH, Midland, LLS, and Mars, and then just have kind of a rolling longer term chart on those grades. So you can kind of judge, the recent trends, historical highs and lows, etc. Also have some commitment of traders, CFTC commitment of traders data, which can be useful, to see how various different types, as defined by the CFTC, are positioned in the marketplace longer term. We also have just like a flat price or outright crude oil quote board in the upper left, and towards the bottom, some very basic, technical analysis type charts with both crude oil flat price and, if you can see the other tab, like the front crude oil spread, which is a pretty important market that many people we speak to look at on a daily basis. So kind of the term structure of WTI futures, and as it relates to the various grades of crude oil that we assess.
Okay, let's move on here. Next dashboard.
Yeah, and then this one again, quote board, but a little bit more comprehensive. I think I have just about every grade that we assess, from the mid-continent Rockies crudes, the domestic Cushing and Gulf Coast, all the way through to Canadian crude oils, and then just to highlight like the news ticker feature on Barchart, commodity view, and then again kind of a longer term, in this case Mars spot, physical spot chart, and the other tab is going to be listed futures on CME, to maybe see like a little bit more of a term structure to that market as well. And then Scott and I felt it was important to kind of touch upon different spreads that people are looking at with our markets. This one being the MEH versus Midland, or the Longhorn spread. This is, that essentially represents the cost of moving crude, again, from the Permian production center into the Gulf Coast refining and export center. This typically is a positive spread, much less volatile than years past, but still can surprise people at times. but this chart kind of showing it ranges between 25 and 75 cents these days.
If I may interject on this one, the cost of transportation is one of the largest factors in determining the value of one crude oil versus another. So traders in a global environment are constantly looking at other options. So this is an important one in our sphere, in the domestic sphere. You take a WTI barrel, which is the benchmark barrel here in the US, and you start pricing it at different locations. It's important for your users and in general the global energy industry to understand this dynamic in particular, because it shows at times when the spread from the origin to the delivery point, when that spread narrows, it starts to show either a lack of demand in one location or a surge in demand in the other location. So it's a dynamic that will inform other trading decisions. If you find at the destination, the US Gulf Coast, if you find that demand is slipping there and it's not affecting the origin, then that's a data point that's relevant for some other pretty important decisions for some of the end users that we spoke about. So being able to view this spread in a historical terms and then overlay some of the other data that's certainly available through the Barchart network, I think will be very important as users become more familiar with our data.
Definitely.
Yeah, absolutely. Yeah, and then Scott mentioned as well, obviously, we were just looking at a barrel at its origin to the Gulf Coast, and now comparing the barrels once they're essentially on the water to Brent, and maybe a slightly more complex chart, but because our data is all basis, what you effectively can do is cancel out the Cushing exposure, because everything is based against Cushing. So you would then have a WTI Brent. So we've basically added that into this chart, which would then give us an MEH versus Brent price. And you can see, relatively speaking, this discount has narrowed pretty aggressively in the last month and a half or so. And the cost of transportation there, instead of a pipeline, it's going to be obviously a boat to get it from, the Gulf Coast to, in this case, anywhere pricing off of Brent crude, which could be Europe, for the most part Europe, but also seeing those barrels go to Asia as well.
So once again, an important dynamic, the origin, if you will, of this barrel in this spread is the US Gulf Coast. The destination would be on the other side of the pond, where the pricing benchmark is Brent crude oil. So traders are constantly viewing the difference between these two similar crudes in different locations, and deciding which one is more advantageous to purchase. So watching and following this spread as it narrows. Imagine the cost of transportation from the US Gulf Coast to, say, Rotterdam, several dollars, and if the difference in price between the two barrels is only 50 cents, well, that doesn't allow much room for the cost of transportation. So at that point, there may be other barrels more advantageous in that location, and the traders and end users will learn that and see that very clearly by following this spread.
Awesome. We have one more chart here.
Yeah, and then as discussed earlier, we obviously have a wide variety in terms of qualities of crude oils that we assess on a daily basis. And this one being kind of more of a localized spread that people look at in the Gulf Coast, LLS Louisiana Light Sweet, obviously a very light barrel available on the Gulf Coast, and then Mars, more of a medium sour barrel. So, you might see refiner type customers make different decisions based on whether the spread is more narrow or very wide. Currently, I think has been on a widening trend. So you might see people make decisions that, medium sour grades are a bit cheaper and decide to run those a bit more. And that kind of would take us back into any of those cracking margins that you could look at as well?
A refiner in particular, the ultimate end user of the barrel, is always looking at refinery yield. What can I make with this barrel versus what can I make with another barrel, and what sort of profit margin is involved. So this is an important spread for a refiner, especially a U.S.-based refiner. But it's a similar spread that's viewed all over the world: a sour barrel versus a sweet barrel, and what can a refinery make with it, and what do those barrels cost relative to each other. So it's an important spread for our users to watch.
Awesome. Well, thank you both. I'd like to kick off a Q&A. So if any viewers have a question for Scott or Mike, feel free to send those over now using the panel. I believe it's on the right-hand side of your screen. So I'll give people a few minutes to get those questions sent in. But while we wait, I actually have a question for you guys. The news has been reporting on crude oil hitting a 7-year high. I think it's $90 a barrel. Where do you guys see the market headed in the next few months?
Boy, if we knew that, right?
Yeah.
I'll tell you, Colleen, the more I watch, the more I read, I don't think that the forecasts are wrong. There's really not a lot, barring an unforeseen event. We're always reacting to unexpected events that can cause demand destruction or cause supply disruptions. Barring any external events, I expect the price of crude oil to continue rising in the short term and in the long term. I don't think the trading community, I don't think that domestic consumers, at least in our part of the world, are holding back anymore. I think the demand pressure from the COVID-19 pandemic has generally lifted in our area of the world, and I don't see that changing anytime soon.
All right, let's see here. We do have one question. How do you differentiate from other data providers out there providing similar data?
I'll take that if I may. I would say our sphere is relatively small compared to the global crude oil market. But in our sphere, I would say that Link Data Services and our affiliates are some of the larger participants. So we should have the most accurate information, the most contemporaneous information. It's going to be reflective of the market on any given day. I think that we cover the domestic pipeline market, the important grades of oil, better than anyone in our sphere. I think some of our partners are some of the best in their sphere. So I think we're in a good position to provide users with this type of information in a more accurate and more timely manner than any of our competitors.
Awesome. All right, one more question here, and this is a good one to wrap this all up. What lies ahead for Link Data Services over the next year?
Well, there's a lot of exciting things going on, I can tell you. I've learned over the years that being in the data business is about half about the information and half about the IT. So we're developing as much information technology as we can. We want our information to be more readily available. We want to consume more information, and we're well on our way to doing that. So we're excited about what's coming ahead. We'll certainly, in the coming months and years, be able to offer your users different data sets and some access to some information that is, up to this point, is really only available to market participants. The guys that are actually buying and selling the oil. We hope to be able to make that information available to market observers in a much more efficient way in the coming months. So we're very excited about that. We also obviously our partnership with you guys should help grow our customer base, and we're very excited about that.
Absolutely.
Yeah, definitely. Likewise, very excited for this partnership. I'm excited to see it grow, and many good things lie ahead, it seems.
Yeah.
All right. That is all the questions I had come through. I'd like to thank both Mike and Scott for joining me. Viewers, if you would like any additional information about linked data services, or if you would like to learn more about accessing this data, if you'd like to get a free trial to Commodity View, feel free to visit our website. It's barchart.com/CMDTY, or it's our commodity website. You could also contact us via email or phone, which is listed on the slide. Yeah, so thank you everyone again for joining us, and I hope you all enjoy the rest of your day.
Thank you so much, Colleen.
Thank you, Colleen.
Bye, everyone.